Hey, Yvonne, how's it going?
Good. How you doing?
Doing good, doing good. All right, let me get this ready. I think we're good to go. I think, yeah, so everything should be lined up. All right, cool. So we can get started. So do you have any specific questions that you have, or is there anything that you want to cover specifically? I just want to get an idea of what we're working with today so I can, know where to focus my attention.
Okay. I signed up for your course, I think over the weekend, Saturday or Sunday, one of those days. I've been through a few of your videos. I've been trading for like a little under 2 years. It'll be 2 years in a few months.
Nice.
Yeah. So like I know, a decent amount. Like I've been profitable probably since like I'd say March, like when I really like consistently profitable since about March. But I'm really looking to, just take the next step and do like FTMO and whatnot. And, their rules with scalping, the way that I trade, it just wouldn't work for FTMO. Even me doing, I did the free challenge one. They even gave me a hard time with that, saying, telling me that my trades were too aggressive and whatnot. But so I know like with the few trades that I've even seen, and I took time to go through like your Telegram and just look through the trades that you sent before. So I see that obviously you know what you're doing, and like this strategy is like I took a look at like the pivots and the what is this called? KSTS. I forget what the full name of it is. Oh, the Trades Proprietary Trading System. The like the
Oh,
indicators.
the momentum indicator. Yeah.
Yeah, the momentum indicator. Yeah, sorry. So I've been looking at those, the pivots and the momentum indicator, but my main question was with the support and resistance version 2. So the way I usually just plot my main support and resistance levels off the 4 hour, I usually go by like most recent price action on the 4 hour. I don't know if you know Wicks Don't Lie. I tuned into a lot of his stuff and I kind of trade a little bit like him. I originally learned to trade with Daniel Savage. So like I trade kind of similar to like the way that they mainly use price action and support and resistance and like the Fibonacci and stuff like that. And, some moving averages here and there. So that's usually what I use. But with your support and resistance, to be honest, I get super confused when it like just pops up on the chart. I don't know. I have an idea. Like I can kind of see like, okay, where the support and the resistances, the areas kind of are, but where I get confused is like how you draw your zones, because a lot of these lines, they overlap and I get like, I just don't like some of the zones I get where to draw them, but some of them I don't. Like I'm just super confused. So I just wanted some clarification on that.
Yeah, no, definitely. So is there a specific pair that you're looking at that you were confused with? Because we can probably look at that and just clear it up from there. We can probably, is there like one specifically where you were marking up and then you saw that it was kind of weird?
Well, honestly, it's just me like applying the when I apply the support and resistance version 2 indicator, I just get confused in general on how how I should look at the zone. So like for GJ, for instance, right? When I go to GJ 4 hour, I'm on the GJ 4 hour, I put the lines, and also too, a question. These numbers that you have on the charts, are those like the regular pivots that are available in TradingView? Like
Yeah,
pivots
so that,
low,
yeah,
like
that would be the pivot points high-low indicator. They just
okay.
indicate, the highs and lows are for the most part.
Okay, cool.
Yeah, definitely. So looking at GJ right here, basically the way that I would draw these zones is I would, so one thing I need to clear up too is I think the confusion might be with your indicator as well. Your settings might be off a little bit. So the way that I have them on, I have where it says show body levels. Do you know if you have that checked on?
Oh, let me check.
Because that might be the issue, because I think some people don't have that checked on, and that might be the difference.
I have that on.
You have it on? Okay, perfect. So basically your chart will look just like mine right here. Basically the way I would draw these is obviously I would draw, the main zones that are created that are far apart, but then I could see where your confusion is, where sometimes these zones over here overlap. Something like this could probably be, for example, like where this green one.
Yeah, like down there. Yeah.
Yeah. So for this one right here, it's really subjective. It just depends on how you trade necessarily, because it doesn't really matter if you use. So if you use this zone, and say if you marked up this whole red zone right here, it would have been the same if you just linked them together as one big zone. since there's not enough space in between these two zones right here, you can see that there's only like, let me see, it's about like 2 pips away. So you're not going to take any trades within those two zones, right? So
Gotcha.
so you probably could have connected these two right here, but I can see where confusion is, because you might think that, maybe you could connect this down here, and then you can probably just connect these down here. The real thing that you're looking for here is you're mostly just trying to separate the empty areas. So right here, you can see that there's a bit of an empty area right here, and it's pretty decent. It's about 30 pips, but in reality, it's really not that much space. Depending on how you're trading, if you're scalping and your spread's like 5 pips, this is technically only 25 pip gap right here, or even less, maybe like a 20 pip gap. Because if you're going to enter a trade within here, you're going to have to pay that 5 pip spread to get in. So you're going to subtract 5 pips from there, and then getting out, you have to pay the 5 pip spread as well. So you technically only have, about 20 pip space between here. That's why I would connect this into like one big one, because obviously you're not going to want to trade, take a sell within this little zone right here, and then it ends up reversing on you before you can even get out of the trade. And then vice versa, you don't want to enter a buy, and then it reverses on you in the opposite direction, right?
Yeah. So you look to enter into the where the spaces are, like when price is like in between the white, and you look to kind of just trade it between zone and zone.
Exactly, pretty much. That's exactly how it works, because the way that we do it is we just try to confirm when price breaks, an important structure. The difference with the K2SRs that I've plotted here in my algorithm, it only plots these zones if the specific price points have been tested exactly. So it has to come to this, like you can see right here, it's 140.451. This same exact price point was tested sometime in the past, at least once or 2 or 3 times. So unless they're tested at the same exact price point 2 or 3 times, there's no zone that's going to be created. And the reason that's really important is because, obviously if you're drawing your own zones by like your naked eye and just looking at the chart, it's going to be nearly impossible for you to go back, that far to see where it tested. You can see that this data probably goes way back to where you can't even look, like probably like way over here. And that's when that zone was created, at some point over here. Like,
Gotcha.
yeah. And that's the main difference. Because the thing is, support resistance is a very simple strategy. Like the strategy that we're applying is very simple. But the problem is a lot of people misidentify support resistance, because you're not able to really look at data that's way back, months ago, or even in January. Like right here, you can see the last time this area was tested, where the zone was probably created, was probably way back over here, November 2019, because that's the time it was testing back here. You can see from November 2019 up until this date, it didn't really test this area right here. Even if I drew a horizontal line, let's see, from like this top point, you can see that this area wasn't necessarily tested for a very, very long time. So that's why for us, we're able to identify like these little structures here, while other people would miss this. Because if you didn't have these zones here, you probably would draw your, your support resistance in the common areas, like the areas where everyone else would draw them. You'd probably draw them, somewhere up here. And then, the way I used to do it before is I'd go from like top to bottom. So I draw like up here, and then I just pretty much, draw these little zones right here as well. But using the support resistance, it's a lot more accurate, because instead of drawing something up here, you have the exact parameters here where they've tested. And the reason I drew this was because over the years of my trading, I used to be a big scalper before too. And I would try to figure out where the banks are trading. Obviously, the banks have specific price points where they trade. They have algorithms that take buys and sells at specific price points. So what I would do is I was trying to identify exactly where the banks were trading. And that's why I drew these zones right here, because obviously you can see, price comes down. The banks probably have an algorithm, triggering buy orders at this point. So that's why it comes down. It triggers the order. And then the next time it comes down again, we already know where that zone is, because the zone has been created. So that's pretty much how it worked. And that's how I would draw those zones. Because obviously these areas of rejection are where like majority of manipulation happens, because the thing is, everyone's trading the same strategy. Like, everyone that you've learned from before, they all trade, support resistance. It's very simple. It's like break and retest strategies. And the way that this specifically works is that a lot of people want to be counter trend traders. So they'll take a sell here, and they'll try to catch like the opposite trade. They'll try to catch the bottom and then take a buy from where that happens. But for us, we don't want to take that specific trade, because like one of two things can happen right there. Like this can either, like when price gets to this structure, it could either reject off it, or it can break below. But again, it won't always happen. Like right here, you can see price broke below the structure. And you probably could have taken a sell here if you were just, following basic support resistance where price breaks the structure. And then it would drop down. Let's see how many pips. It would drop down about 36 pips, about 30 to 40 pips right there. And normally a person would think that that's enough for, price to continue down, right? But if you didn't have, this whole setup that we have here where we've drawn all these structures, you would have identified that this was actually like a little fake out. So, I mean, it might be hard for you to see, but for me, I would have seen this because obviously
No,
this
I get what you mean. Like, I get what you
yeah.
mean. Like this down here, even like, okay, so the way that I kind of, the way that I usually typically draw my support and resistance, I go off of like specific candle patterns, like kind of like either, I call them like tweezer bottoms, but people have different names for them, but kind of like bearish bullish, where like price close and price open are at the same point. And it kind of like only on the 4 hour though. And it'll kind of like use it as support and like, or like a bearish engulfing or a bullish engulfing, something like that. And I'll kind of use those areas as like support and resistance, like even looking at GJ where I can't, let me move your zoom over. Cause I have a 2-screen setup, but one of my screens is like, it's long ways. So your zoom is kind of small. Let me make it bigger. So,
gotcha. Okay.
So where yours says 143.35 up there, you see how that's a bearish engulfing. That's I would use that as resistance just based off the bearish engulfing. That would be my resistance. You know what I mean? When I see like stuff like that, and when I see like larger wicks on the 4 hour, like even where you said that fake out was, to me, this was Friday, so I didn't trade that because I was that gap or whatever. But
exactly.
But regardless, down here, like that to me would have been like a support level just based off of those, like it's like a tweezer bottom pattern on that bottom where you have your support. So even like when I put on your levels are kind of similar to where mine are. Yours are much larger than my levels are, and there's like more of your levels than there are of mine, but they kind of line up. You know what I mean? So they're not exact, obviously, but they do line up a little bit as far as like the bigger areas where I have my resistances and the support and stuff. So I was noticing that, but it was like I literally just didn't know how to kind of like plot them. Like just the lines, I guess I never saw support and resistance, any indicator that looks like this. So it threw me off when I saw it.
Yeah.
So I just wanted, some clarification because I saw you do it on the live a few times this week. Like I tuned in yesterday and today. So I saw you do it yesterday. I think you did like at 11 p.m. It was 11 p.m. my time. I don't know what time it was for you because I'm in New Jersey, so I run off Eastern Standard Time. But
gotcha. Yeah. I think that was like on Sunday, right? Because on Sunday,
something like that.
Yeah.
Like you were going over the chart and kind of plotting the lines, but I hadn't even touched your support and resistance video yet, so I didn't really know exactly what to do. So I wanted to watch the video first and then ask you about it.
Gotcha. Yeah, definitely. Yeah, no, and that's awesome that you know how to read that because like I wasn't sure what level you're on because I didn't want to go too ahead. But then now that you explain that you understand this, that's exactly what I see too. So like right here, I'd have this this zone right here, and like how you mentioned the tweezers, you have that long wick and it's followed by a bullish candle. So obviously it was going to reverse back upwards, and that's perfect because now that you have the indicator, it like you can tie those two together for that extra confirmation.
Exactly. Because like that's really what I want to do with your strategy is like use yours, like use what I know already and just use yours as like extra confluences for me. You know what I mean? Like as far as your momentum indicator and these support and resistance levels, seeing that they're not too far off from mine. You know what I mean? Like they kind of line up a little bit. It's like, okay, I know that if I'm identifying this area and so is your indicator, then this is a legitimate area. You know what I mean? So that's kind of what I wanted to use it for. And also a question. So I think on the YouTube, you said you don't really use the pivots too often. You just kind of use the momentum indicator and the support and resistance really for like the way that you trade specifically.
Yeah, exactly. Cool. Because before I used to scalp a lot, so I would use a pivot indicator. I would just use the pivot strategy for the most part. And I'm not sure if you realize, but the pivot indicator,
it's like moving averages, right? A little bit, it looks like.
Yeah, exactly. But they're like what are they called? They're like dynamic Fibonacci's. I don't know if you ever noticed that.
Oh, yeah. The fib retracements, they kind of like I seen like when they retrace the fib, like a lot of the times when price is like kind of touching, maybe that red line, that fourth line, or maybe even the third one, it's a fib retracement for sure. I noticed that, especially on the GBP pairs, because I use fibs a lot for GBP pairs, mainly like GJ and GU. I trade, and I use the fibs on those pairs a lot. I used to use them on US 30 a little bit, but not too much. I got kind of burnt on those too much for the fibs, so I kind of just stopped. But the GBP pairs, like today for instance, right? I don't know if I can. Let me see if I can show you my chart really quickly. I just got to clean it up because I just put like all your stuff on it. Like, you know, I was just going through what you were going through, and I kind of got rid of my analysis. But I can show you like the.
Hey, man, I think you might have gotten muted, or let me see. I'm going to ask to unmute. Sorry, you just kind of broke up halfway through. Let me see if I could.
Can you hear me now?
I could hear you now. Sorry. Yeah, you were talking, and it just cleared up for a second.
Yeah, it cut off, I think, real quick.
Gotcha.
But yeah, so I can like for instance today, when you were before you called the DJ long, I was already in one from a fib.
Oh, nice.
So like I think you called 139. Let me look in the chat. 139 something. DJ. Oh, 139, 311 was your entry. I entered in at 139. I gotta pull up my phone, but it was like 139, 150 or 139, 1 something. And I caught it from a fib retracement. I didn't have the pivots or anything on. I just kind of like I have multiple charts in my trading view. So since I just signed up for your stuff, I've been back testing it more so than keeping it on my live chart. But today I'm gonna try to pull it up right now and just try to share my screen real quick. Oh, I can share it to you now. And I'm just gonna draw the Fibonacci because I didn't.
Yeah, definitely, that'd be perfect. Yeah, because I don't trade Fibonacci's at all, and it was funny because one of them, like a couple members, like mentioned it when I first released the indicator. They were like, "Hey, how'd you make this like Fibonacci that automatically adjusts?" And I was like, "What do you mean?" And then they drew the Fibonacci, and I was like, "Oh, dang, it actually really lines up like perfectly." But yeah, pretty much they're pretty much EMAs that pretty much just trace the trace price as it moves for the most part.
Oh, okay, cool. Look, I'll actually show you this one. Can I share my screen? What is this?
Yeah, you should have that button that's next to it'll have like participants, and it'll have like a little drop down menu where it has share screen, and then you can click where it says new share.
Okay, wait. It says you can't start screen share while the other participant is sharing.
Oh, weird. Let me see. Here, let me fix this real quick. Gotcha. Okay, I got to make you a co-host.
Okay.
Yeah, I think you should be good now. Try it again. There we go.
Okay, yeah. My chart is super bare. I got rid of it. Mm-hmm. But yeah, so literally today when I entered here. I think this was 139, 140 because honestly it was a super risky trade. I only really entered it because I think on another chart I had like the momentum indicator and I saw like I got like a buy signal. So I was like, okay, I'm like, that is in confluence. I had my support and resistance marked up, but I cleared off my chart. But and also too down here, or no, up here, after I go on the 1 hour. Hold on, let me make it my fib visible on the 1 hour real quick. Stability, okay. You go here on the 1 hour. I also saw this resistance area. See, you have this tweezer top here. This made resistance here. This was a break retest of that resistance. See the break retest close above, and I caught kind of that wick on the smaller time frame on the 5 minute off that fib entry. My Fibonacci was drawn on the 5 minute, but I had that zone as resistance on the H1. And then when I saw it broke it, price started to trend down. I drew the fib. It was literally like barely in my Fibonacci zone. I trade mainly my entries in between the 0.5 and the 0.618. So it, like sometimes it comes all the way in, sometimes it didn't. This time it wicked in it, so I entered a little late outside of it, but I entered down here and price went up. My TP2s on the fib. TP2 is a 0, TP3 is here, TP4 is up here. But obviously it didn't reach up there, but I just took profit at TP2 and kind of let the trade go. But yeah, like I caught that off of the fib, and it was funny because probably like I don't know how many minutes later you put in the buy. You know what I mean? The signal for the buy. So
Exactly. And you got in like way earlier. Cause I trade off the 4 hours. So like you got in like right when it rejected. And the thing with the 4 hours, like it's like a double-edged sword because sometimes you get in a little late, but then you have a lot more confirmation because you wait for that actual, that full candle to close versus getting on like when there's a lot of noise. And that's why I moved because I used to trade on the 30-minute a lot before, but then I
Mhm.
felt like there was a ton of noise on the 30-minute. And I tried to go to the 1 hour and I felt like there was still noise. So that's how I moved up to the 4 hour. And pretty much that's how it goes from there.
Yeah, yeah. Like when I first started trading, I like because like when you first start trading, you think scalping, you're supposed to get your damn entries off of 5 minutes or 1 minute, you know what I mean? When you first start. So I got way burnt doing that. And then I started, working my way up to the higher time frames because I'm an impatient person. I still am, but like now I know how to manage it better. But when you first start trading, impatience is like a killer, you know what I mean? So that I had to start getting used to trading off the 1 hour, the 4 hour and stuff. Now I usually typically get my entries either off the 30-minute or 15, but that's only if I have like 1 hour and 4 hour confirmation first. You know what I mean? Like I'm at least seeing something that I like on those time frames before I go down to the smaller time frames to look for my entries. But just for like real quick, like for GU, I'm gonna throw on these, right? So your pivots for GU. So for me, I guess I would just draw these like this, these zones. So this is where I get confusing. You see how it's like they're all super close? It's like, how do I know? Like this is one, right? This one would be one, right? And then would that be space? And then would this one be another one?
Yeah, that's how I personally do it because you can do like one big zone, but I personally like to have a lot of well, not a lot of zones, but like where they're spread out enough where I can like pretty much depict like a storyline. That's what I like to do. I like to have everything lined up and then I zoom out of the chart and then I try to
Mm-hmm.
see where price rejects from. I see like how it rejects from one zone to another zone, and it kind of I don't know. For me, it's easier for me to just eyeball it and see how price is moving rather than using all these other extra things on top of it. I'm not sure if you saw how I was doing that with the live sessions, but
Mm-hmm.
yeah, I pretty much would do that like exactly how you're doing, and then I would have that small zone as well, a little bit
This
above.
right here.
Yeah, that one right there. Just
And
to,
then
yeah,
really
just
quick, down here, what would you do down here? Because you see how this goes to here and then this is here?
yeah. So I would connect that where that wick is on the left. So I connect those three right there. Yeah, that whole bottom zone down there.
This whole thing?
I
Or
would
no?
to the bottom one. So I'd move that top, just the three bottom lines on the bottom.
Oh, got you.
Yeah, yeah. So I would do those three right there, and then I would connect that middle one to that one right there. Yeah. But in
That
reality, yeah, but in reality, it wouldn't really matter too much because when you're analyzing the trade, you'll make your little adjustments because you'll see if price breaks into a like a support resistance area.
uh
Generally you wouldn't want to trade where you see where that top zone you or the second to the bottom zone that you drew. Like
this
you
one?
see how there's a lot of zones within that zone.
Uh-huh.
Like you don't want to trade in there obviously because there's so many points of rejection, right? Because it can reject off any of those lines. Comparing that to that open space in the middle, like even though that's technically a zone, I mean, on the bottom,
Uh-huh.
between the two bottom zones that you drew,
Yeah,
so that big open space right there,
this one.
that yeah, even though that's technically a zone, there's no other like lines in between, right? So there's not going to be any areas of rejection right there. So that's why I
Mhm.
would separate those two versus connecting that as one zone because you can still trade
Gotcha.
in that area. I think that's probably like maybe a 30 to 40 pip gap between there. You can probably measure it and see how yeah,
Yeah,
exactly.
30,
See, 30,
yeah,
40 pips.
exactly.
Exactly.
Yeah.
And you can make some pips off that. You can like take a small, like either an intraday trade or a small scalp right there, lock in maybe 30, 40 pips within that little move.
Hmm.
And you can get in and out and then wait for it to break the zone above it. So that's the main difference. The main difference is you just don't want zones where there's a bunch of a line. If there's a bunch of lines in within the zone, then you'll connect those together. If there's a big open area where there's no areas of rejection, then you can leave those like as an open area where we can still trade within.
Got you, got you.
Yeah.
Got you. Okay, see, like even for instance, right? You see how this zone and like price respected this clearly as support and went up. Like today, for instance, I'll take these off really quick. But today, kind of how I was looking at the buy anyway. Once like I got into it late, I didn't see it from all the way down here. But how I was looking at the buy as well too. Look at this, of like a bearish engulfing forming a resistance area is a swing level from here. I don't usually extend my zones all the way here, but I would start it here, extend it to the left, and you see that price literally sits on it like support. It's a swing level. It was resistance first, and then it became support. And then price respected it clearly. You know what I mean? These are false breaks. Those will be candles on the smaller time frame, but it's false breaks on the H4, and it comes up. You know what I mean? So even I saw that. So like, and when I put back on your indicators, this whole area down here was like that big zone. You know what I mean? So that's what I mean by kind of me seeing your zones line up with mine a little bit. It just confused me again because like, for me, for instance, like when I like I'll even draw my zones normally how I would draw them, I guess, really quickly. Let's see. So yeah, so I kind of extend them only right, and I'll start them where they start. So like I'll just kind of you know, look for decent support and resistance zones. Like even here, this would be a resistance. It was broken, retested, closed above. You know what I mean? So then for me, price would head up to the next support or resistance area. This would be one as well. And we could see that price rejected out of here a little bit. So now it's sitting in between here. And then I will plot, you know, these other, like, so my zones are super thin. That's what threw me off about yours, is because when I plot mine off the 4 hour, they typically look like this. Then I'll do them on the 1 hour. And I mainly only stick to like daily 4 hour, 1 hour zones really for trading, because I feel like these are the ones that are respected mostly. And then, you know, I'll look for my entries on the smaller time frame. But that's what really threw me off about your zones, because usually I'll use either these zones or sometimes I'll use lines depending on what I see. But I mainly use the zones because, you know, it's never like a price point. It's always a zone for these levels or these support and resistance areas or whatever. But that's what really like I needed clarification on, because like this is how my chart would normally look. So, you know, me seeing like all of this, it threw me off. You know what I mean?
Exactly. Yeah, no, definitely. Yeah. And that's a good thing too, because you already know how to draw your own, you know, your own zone. So like you mentioned, it's a good confirmation because you can draw your zones. And, you know, technically you can see how like those upper wicks are like, it fills the entire area where the zones are a lot bigger. You don't necessarily have to have that huge area right there. But since you know how to draw yours, if they line up perfectly, you know, that gives you the extra confirmation that, you know, this is a solid zone that you should look out for.
Yeah, for sure. For sure. And then just another question too. I need to do way more back testing on this, because again, I only signed up a few days ago. But as far as the pivots, I was looking at US 30 for a little bit with the pivots, you know, doing your like the intraday strategy for US 30, the daily strategy, the one trade per day. With these and these. So I was looking at a few days. I think it was this day, the 11th. Let me see. Yeah, this is 9:30. 9:30. Boom. So I know you look for your trades after NYSE open, right? So and that's 9:30 for me because I'm in New Jersey. But this day, right after 9:30, we get 3 back-to-back signals. Like, how would you know to filter these out? You know what I mean? Like, and not to take these 3, but to take this one, because this looks like the one that really hit. You know what I mean? This buy signal here. So how would you know to filter those out? Because like, for instance, this one right here, it looks a little valid. Just right here, price is above the pivots, and it's a green buy. It's a buy signal with a green candle in it. You know what I mean? The only reason I wouldn't take it is because this is a little bit of a resistance area here. Like, it's a bearish engulfing and it's running into resistance. That's the only reason I wouldn't take it. But it's a 10-minute chart, so like the resistances and support on the 10-minute chart don't mean anything. You know what I mean? So to me, if I weren't on, say, your YouTube or whatever, I would take it and then probably get stopped out or whatever. I mean, it does end up going for a buy later on. So is that why it would be valid? Because it does go for a buy later on. You know what I mean?
Yeah. So I think the 11th, that was a Friday, right? The thing with Friday is that the market moves a little weird on Fridays. I don't know if you ever noticed it.
Gotcha.
Yeah. So
I don't trade US 30 too much anymore, so I wouldn't know that. I really stick with the GBP pairs.
Oh, gotcha. Yeah, because Friday is kind of a weird day for stocks, like the stock market, because a lot of people are already exiting the market for the weekend. Because, you know, a lot of people don't hold over the weekend. especially something like US 30 that's so volatile. They don't want to hold it, and then they come back on Sunday or Monday when the market reopens and their accounts like disappeared, because it's moved so far
Yeah.
over the weekend. So I would take the first signal. Can you measure to see how many pips is that? Because I think we did take that trade, but we only took it to TP1. Generally, if we trade on Friday, we try to exit as early as possible, especially for FTMO, because we can't hold trades over the weekend. So if you can measure that where that sell signal is, like just see how far did it drop from there. I think we did take that trade, but
The
we
sell
only
signal.
the first one. So the one on the left, that. Can you
Okay.
measure yeah, from there to the bottom? Okay, perfect. Yeah, so I did remember taking that. Let me see if I can pull it.
Gotcha. Okay, so you took this. Gotcha. Okay, so you took this
Yeah.
signal.
Yeah, so
Okay.
we took that one right there. We always take the first one because the way that the momentum indicators work is it pretty much detects when big movements in the market are made, like unusual movements,
Mhm.
like a shift in momentum or a shift in price where it shifts super heavily, where it kind of identifies it as not necessarily a normal move, but a move made by basically the banks or the institutions, because generally they like to fake people out on the open of the market. So you can see right there, as soon as the market opens, it pushes up slightly, and then they try to lure in all these buyers. Because if you're looking at the trend, most people trade off the trend, but a lot of people don't
Mhm.
realize that US 30 doesn't really follow the trend. It usually just goes off momentum, because basically they try to fake people out in the beginning. You can see from 6 or 9:30 a.m. your time when the market opened, it pushed up slightly. So it's luring in buyers,
Mhm.
because if you were looking at that from, that bottom right there all the way to the left, like right before market opens, it would
Mhm.
look like it's a strong bullish move, right? So people would try to hop into that buy. And then what happens is the market makers, institutions push price down. So you can see where that sell signal came. They push price down
Gotcha.
to stop everyone out. So pretty much everyone who was in that buy gets stopped out right there. And then they push it right back up.
Gotcha. Gotcha. So you literally go based off the very first signal, because this buy signal that I was talking about was the second signal. So you would have
Exactly.
went off this first signal, which was that sell signal.
Exactly. Yeah. Because what we're doing is we're basically waiting for the market to open. And then after the market opens, we're just waiting to identify where the banks and institutions are pushing price. So basically, we see them push price down because you can see that fake out where they're luring in all these buyers. And obviously, people would still enter that buy. That's why whenever we enter our daily US 30 entry, we take it and then we don't even look at it, because we know that the market's going to go crazy. It's going to go up and down and try to fake people out to get out of their trades, or to kick people out, basically, because not everyone can handle US 30 for the most part, especially if you're taking a bigger risk, as
Yeah.
we do during the intraday. So that's pretty much how we do it. We just wait and we identify the movements that are being caused by the banks and institutions. Because basically, if you were to see the sell signal and you didn't realize what I just explained to you, what we're looking for, you probably wouldn't have taken that. Because if you like rewind the candle to that sell signal, it would, like, there's no way that you would take that sell like a normal person that's trading price action. If you yeah, if you can just pull it back to there and just look at it, like, there's no way that looks like it's going to come down, right? It looks like it's going to continue up.
Yeah, no way, no way. Like
Yeah.
this legit looks like a fib. This is right here
Exactly.
looks like a Fibonacci retracement. You know what I mean,
Exactly.
or a
100%.
partial fib retracement or whatever. Yeah, no. So I would. It doesn't look like it's going down at all. You know what I
Yeah.
mean?
And then surprisingly, it comes down because what the banks and institutions are doing, they're basically just they lured in all those buyers right there so that people can buy. They see
Mm-hmm.
this at a smaller tracement, so people buy into that, and then they end up getting stopped out. And then after they get stopped out, that's when they have the actual push go. Because the way that US 30 works is that it usually works in two waves. So in the beginning, it'll have one wave where it pushes one way, and then
Mm-hmm.
midday around lunch, that's when all the all the big traders and all of the banks, they get out of the market. At that point, they're out of the market, and that's when all the retail traders like hop in, and then you see like a huge spike of volatility in like one direction. It's usually around 10:30 to 11 my time, I think, and then that'd probably
Mm-hmm.
be around close for you. So it'd probably be
On
around,
two.
yeah, it'd probably be in between maybe 3 or 4, somewhere around there.
Okay.
Yeah, because if you go ahead and move the clock forward, or you can just exit the replay. Yeah, if you just mark up from, oh wait, what are we looking at again? On the 11th, right?
Yeah. Oh,
So
well, we'll go back.
the 11th is a little tricky because it was Friday. But if you normally look for the session, if you just mark up from like 9:30 until, I'm assuming, 5:30 your time, right? That's the way that the session works.
Yeah. Well, about 4:30 it closes. Sometimes the market's
Okay.
weird.
Yeah, so if you put like a vertical line where 4:30 is, you can see that price generally swings twice during each session. So you can see it
Yep,
swings down.
down and up.
And
Yep.
swings up. Exactly. Yeah. And the market always plays that way. That's why usually when we're entering the trade, we try to get in by 10 a.m. my time, which would be, I think 11, 12, 1, yeah, 1 p.m. your time. And then we try to get out of that trade before then, because we don't want to get caught in the midday reversal, basically.
Got you. Got you.
Yeah, and you can kind of see right there too, even on that day on the 14th, you can see at the beginning it shot up, and then midway, well, not midway, but like a few hours in, it ended up spiking down like completely.
Mm. Yeah, no, for sure. I like with US 32, I noticed typically in the beginning of the like in New York NYSE Open, it'll like whipsaw the opposite way a little bit, or
Mm-hmm.
like it'll give you like a candle, either it'll whipsaw the complete opposite way, or give you a candle with like a massive wick but a small body. So like it'll be ridiculous, and then it'll go the way it's actually supposed to go after the market chills out for like either 9:30 to 10 or maybe 9:30 to like 10:30 a.m. or something like that, and then it'll like chill out and actually go the way it's supposed to go until, like you said, then in the afternoon it'll reverse. So I did start to notice that. And like a lot of the time zone now when I trade, I usually trade after NYSE Open with US 30, because I either, or if I'm going to catch a trade, it'll be in London, like in the beginning of London session, because you can get nice London session pushes sometimes with US 30. So I'll either trade in the beginning of London, but if I do trade in London, I'm out by the time 9 o'clock hits, because I don't know what's going to happen between 9 and
Exactly.
10:30, to be honest.
Exactly. Yeah. And that's always the problem, because a lot of people like to hold US 30 trades from session to session, but they don't realize that it actually reverses, or most of the time it reverses, but usually from London into US, because some people use the same strategy, but during London Open. So it works for that as well. I personally don't use it, so I can't really vouch for it, but I know a lot of people do use it, and it does work sometimes. So sometimes, say if we have a buy signal during London session, right? If we get another buy signal for US session, that's going to give you more confirmation that's probably going to continue that direction, because the momentum was established in London, and then you'll see some retracement in New York, and then you'll have another buy signal, and then that will just continue the actual trend that started during the London session.
Got you. And question, do you like, cause so do you know, cause I know you said you don't do it yourself, but do you know if those people use like London session open 3 a.m.? Cause like we use NYSE open, which is 9:30 a.m., but that's stock market open. That's not like, New York session Forex open. You know what I mean?
Exactly.
So
Yeah.
is it London open, or like London market, like London stock market open or something weird like that?
Yeah,
Or
it's
is it
actually
just
London
legit
Open.
London?
I
Okay.
don't even. Yeah, I was wondering that myself, because I tried to Google to see when the London market opens, and I just couldn't find anything. What I was trying to do for a while is I was trying to find when was a sweet spot for Asia session and London session. For
Uh-huh.
London session, I figured that it was about midnight. But like I mentioned, I don't trade it, so I don't really have like a deep back test. Because the thing with the US session is I back tested this to find the sweet spot like 5, 10 years back. I went super far back in the data just to find out, where's the best time to enter. And I
Mhm.
figured that it was right after the New York Stock Exchange open, because obviously, the New York session technically opens at like 5:30, but the stock market opens like an hour after.
Mhm.
So, yeah, the only reason I know that the stock market's the best time to start the entry or after it is just for my back test. So I personally don't know what's the best time for London, but I think it's midnight. I know everyone else uses midnight. They
Okay.
usually trade the UK 100 though, because US 30 it moves kind of weird during London session. So
Yeah.
instead of that, they trade the UK 100, and they've had a ton of success with that as well. So I'm thinking of like staying up from London and still in New York, and then just sleep opposite
Oh, okay,
hours.
cool. I was trying to see if I had UK 100 on my broker, and I
Mhm.
do. So I
Oh
will
yeah,
add,
yeah, definitely.
I'll add that. Let me, I never even looked at that. UK 100. That's this one, right? FTSE
Yep, that's
100.
right.
Okay, cool. Now I'll definitely start looking at that one, because I saw a couple people profiting in the chart from that, but I hadn't, honestly, I didn't even know anything about it. I was like, I don't know what it is, or too much about it, but I'm definitely gonna look into this one and definitely start back testing it. But thank you. This helped a lot, especially with clearing up how I do the zone. So I'm just gonna like practice those a lot to get practice it on a bunch of different pairs to get comfortable with trading it. And then just one more question too, because I know you said like you traded stocks for a long time.
Yeah.
Um, I was looking into like trading stocks and stuff, because my broker will allow me to trade stocks. So when you send those stock alerts, are those like for like people to actually enter into like stocks, like how you trade stocks on your Forex app, like on MT4 or something? Or
Oh, you're
like,
talking about the stocks group, right?
yeah.
Okay, so the stocks group, that's actually run by Felix. It's another guy,
Oh,
Felix and
okay.
Samir. There's two other guys. I don't trade stocks anymore,
Okay.
so I'm not sure exactly how they do it. But I think they're just meant to be entered as normal stock because they both trade on TD Ameritrade, TD Ameritrade's Thinkorswim. That's where I used to trade before.
Yeah.
I'm not sure if that's where you trade, but that's where the majority of people trade stocks. But I think you could be trading it on both. I'm just not sure which stocks your broker carries if it's MT4 because I know there's a couple brokers that do carry them, but there's not that many. Like they only carry like the big blue chip stocks, and they're not normal stocks. You
Yeah.
don't buy shares; you buy like fractions of them, which is kind of weird. But I don't know how that works necessarily.
Oh, okay. Okay, cool. Now I was just checking because I saw like the stock alerts and I was just, just interested in that. But no, thank you. Thank you so much. This really helped. I appreciate your time.
Yeah, definitely. Yeah, if you want to like get more details on the stocks, you can reach out to Felix K2. He's actually a little kid. He's only like 13, I think, but he's really really smart. Uh,
Really?
Yeah, and he kills it with stocks. Like his stock calls are on point. It's crazy. It shocks me all the time that he's really killing it.
Oh, that's dope.
And Samir is another guy. He's located in New York too on the East Coast. So he does options. So if you want to like
Oh,
dive into those, yeah, if you want to dive into those are the two main guys for stocks and options. Me personally, I just don't trade them anymore because I prefer to trade, a 24-hour market versus
yeah.
it just allows for more like free time to do other stuff because I'm already trading US 30 during the day, and it's kind of hard to like balance US 30 with stocks, because they're on around the same time.
Yeah, for sure. I honestly, I just wanted to like, I don't plan on, trading my actual money in anytime soon. I just want to, get my feet wet with learning a little bit. I'm gonna focus on, doing FTMO challenge. I'm legit gonna sign up for it very soon and just start to probably at the end of this week or something and start to do that challenge because like I saw that, so many people passing their challenge from your trades, and I was like, what doesn't like it doesn't make sense for me to not do FTMO now. You know what I mean?
It really doesn't make sense because the thing with FTMO, like it's such a blessing because it teaches you to be a professional trader. Like it has so many strict requirements with regard to like your daily loss limit, the max limit. Because the thing with a lot of people is a lot of people really don't use risk management at all. They'll go like heavy lot size sometimes and they'll let trades run into deep drawdown, just hoping that it'll come back. But with FTMO, they'll cut you off. Like if you
they won't let you do that. Exactly, they won't let you do that. And honestly, now I mean, oh damn, I don't have it. I just got a new computer, so I don't have my notes up here that I normally have. But this one guy that his name is Raul on I think his name is like Lambo Raul or something on Instagram. But he did FTMO challenge, and like a few months ago, he put up, I was on one of his Zoom calls and he put up like this trade management plan for FTMO. And he basically just tells you, to risk like either like, I think it's 1% to 0.5% per trade until you gain 5. And then you can risk 1 to 2% max. And then like depending on the setup, but he really only like stresses 1%. He's like, if you want to risk 2%, it better be like a setup from God. You know what I mean? But then you just stick with the 1% until you build up to your 10%. And then once you're past that, then you can up your risk slightly. You know what I mean? But when I first started trading, not knowing anything, I was blowing my accounts just off a shitty risk. You make one trade and you're like, okay, I'm good at this. And then you like risk all your fucking money and lose one trade and you lost all your money. So like now, I'm like good at risk, only risking like 2-3% max per trade. And then just like going from there. But that's because now I can manage risk. And honestly, with these trades on US 30 and me trying to, back test and get the hang of your strategy, and I'm trying to back test it on other pairs too. I've seen it worked on GJ, GU a little bit too. I've been looking at just the pairs that I trade, GJ, GU, and US 30, because that's what you trade. And I'm going to look at other pairs too. You know what I mean? The other pairs that I trade to see if I can make it work.
I think you froze up a little bit, Yvonne.
Huh? Oh, damn, my internet.
Could you hear me? Yeah, you like froze up for like a good. It's all right. You just froze for like 10 seconds, but I heard what you're saying. But yeah, like I did find that the JPY pairs do work very well because they're so imbalanced with the pairs that they're paired with, like EJ, GJ, that you're able to catch momentum swings with them. Like if you're trading something that doesn't move very quickly, like EG or something, it's going to be a little bit harder to identify entries. But definitely, I found a lot of success with like the JPY pairs. Those are probably my favorite pairs: the JPY pairs and the
Okay.
AUD pair. So those are
Okay.
definitely going to be some good things to look at if you're going to backtest.
Cool. Cool. So I'll definitely look at like GJ. I trade EJ as well, not too much, but now I'm gonna because it moves similar to GJ. Like, it has like these
Exactly.
large, big momentum swings. You know what I mean? So that, and this pair moves very well with the fibs, which is why I traded it too. I'm looking at it and I can see a bunch of fib retracements in here too. But yeah, no, I'm definitely gonna back test it and pretty much just go from there. But thank you so much.
Yeah, definitely. If you have any other questions, because obviously, I'll have all the answers since I created all this stuff. So if you have any
Yeah.
other questions, with regard to the K2 strategies or the indicators, feel free to reach out because I'll make time like whenever you need it. And I'm here to help you. I definitely want to see your success. I want to see everyone succeed, and it's totally possible. I mean, you've seen a lot of people be successful at trading, and why can't it be you? Obviously.
Yeah, no, exactly. And it's like even though I've been trading for almost 2 years, it's like all these people that I see, you've been trading 10 years. Like a lot of these people, they'll like blow up, but they've been trading for like 5 years, 4 years, 6 years. You know what I mean? And they just kept at it. So that's what I'm doing. I'm like, there's no reason for me to let go of this because there's no job that's gonna pay me like this will pay me. Like literally not a job in the world. So, that's why I'm gonna just stick with it and definitely, do the FTMO challenge and just go from there. So I'll definitely reach out if I have any more questions, but I'm gonna just do a bunch of back testing so that like when I come with the questions, like they'll be very specific and like I'll have gone through everything. So I won't have, as basic questions that like I had today.
Oh no, definitely no. And I really appreciate that you came with like actual questions because a lot of times people like are brand new. So I like that's why when I first asked you like, what do you want to cover? Because the thing is some people want to go over the course like module by module and even the basic, like the very basic stuff. But I'm glad that you have experience because it's a lot easier and it helps us really connect on a better level for me to help you, with regard to what you have problems with. But yeah, definitely. I think you're definitely going to succeed a lot because you already have enough information and skill going into this, and then just tying in the K2 indicators, you already see how that can, complement your strategy already. And it's just going to increase your odds of, having these great trades overall.
Yeah, no, for sure. For sure. Thank you. I'll definitely reach back out, like I said, after I do my research and stuff, and I will catch you on the live tomorrow because I'll be on. Like literally
Yeah.
I left my job not too long ago to do this. So, I'm gonna just be on like every day tapped in. So
That's the only way to do it. The more practice, the better. And it's just going to be second nature to you eventually. Like you can see how I like analyze charts and I draw everything like super quickly. Like that's going to be you like soon enough because that's all it really is. It's repetition and just mastering, the same exact skills that you apply every single day.
yeah, no, for sure. For sure. Thanks again.
Yeah, definitely. Yeah. So I'll see you tomorrow during the live. Hopefully we get another US 30 entry and we'll see how that plays out.
Yeah, no, for sure. For sure. I'll see you tomorrow. Have a
Yeah,
good night.
definitely. All right. Talk to you later.
All right. Talk to you later. Bye bye.
All right. See you.